but you're playing the odds for the market to move higher. Okay, and that's exactly what you're doing. The next candle opens up, pulls back, starts moving lower, taps into the area that we spoke about was a likely area to see some rejection. And once again, this is how I would map out my Draw On Liquidities. Not every day is going to be exceptional in terms of you reading the market, but you can see that we had a fairly decent idea with the market moving into the upper level once we clear this high here. Okay. Draw On Liquidity, although it is not a necessary concept to be profitable, I do believe it is quite helpful with determining market direction and overall trend, and can help you with eliminating a lot of noise that comes with trying to identify the market direction. Now, as I said, I do believe there's many ways to skin a cat, and if you've watched my channel, you know that there's numerous ways you can approach and look at the markets. I still thought this will be helpful to share, so that's what we're going to be going over in this video. What you're looking at here is the DAX on the hourly time frame to the right, and the 1 minute chart on the left hand side over here. Now, Draw On Liquidity will be dependent and subjective, as many things are, in relation to the time frame that you use on, which is to say that the daily time frame will have a drastically different Draw On Liquidity than a hourly chart might have. And for that reason is why I say that you have to have a time frame where you're going to be looking for Draw On Liquidity and buyers, and you need a execution time frame or trigger time frame. In this case, I'm looking at an hourly chart for buyers and Draw On Liquidity, and I am looking at a 1 minute chart for executions on those. Draw On Liquidity. Mind you, I'm not going to be covering actual trades. We're just going to be replaying the price action, understanding the Draw On Liquidity concept. Now, for me, and the way that I like to do things is I just look at this chart from a very basic standpoint and ask myself a very simple question. Where is the market likely going to be trading in my session? If I'm scalping and I'm only going to be sitting here for the next 3 hours, I'm not going to zoom out and say, oh, the Draw On Liquidity has to be below this low, and I'm not going to do anything until that happens. I do believe that that is a wrong approach to take, and I'm more so concerned to where is my market likely going to be trading within the next 2 to 3 hours. And I would simply mark out the different Draw On Liquidities that I would see. I haven't looked at this chart, I've just picked a random date, and we're going to be going over this. So I would say that this is a Draw On Liquidity to buy side. This right here is a sell side liquidity pool, which is to say that there is bearish Draw On Liquidity possible there, another one being here, and obviously another one being here on top. Now that is it. Those are my Draw On Liquidity levels. I don't need to zoom out, as we said, because I'm scalping. I am looking for where is the market likely going to be trading in the next few hours, and I don't think it's necessary, although possible, that the market is going to get somewhere down here. It is not relevant for me. So I would simply just play the price action out now. We're going to be seeing the 1 minute on the left, the 1 hour on the right, and let's see if they do anything. So we tap into the lower area. Once again, you do see somewhat of a decent move away. We do engineer lows here, so this Draw On Liquidity becomes stronger in my opinion, although we have one to the upside, and I'm going to be showing you how I would use these levels to do business in a second. But we're just going to be playing for the first 2 to 2.5 hours of the London session. Once again, I've picked the London session because we're obviously looking at the DAX, and that's when it's going to be most active in my experience. So it looks like we tapped the lower Draw On Liquidity. We didn't reach into the lower one. We started to move to the upside. Very, very simple. Now, how do you trade this? Well, there's two things that I look for when we tap into a Draw On Liquidity. I'm either going to be looking for rejection and I move to the other side, which is to say that I'm going to be looking for the market structure to shift and go bullish, which in this case would have been something like this. We get a swing high here. We then respect bullish order flow here. I put put this on, you will be able to see it. We respect bullish order flow there. We shift the market structure bullish. Any pullback should be a buy. Once again, we've cleared a draw on liquidity. We've tapped into an area. We've shifted the market structure. We get a move up. Okay, that's number one, how I would trade it. Let's just wait for the next way of trading it to present itself so that I can cover it with the actual candles, which would be to look essentially for acceptance below or above these areas, to look for the market to draw into the next draw on liquidity area, which is to say, actually, let's just go through this rather quickly, that if we were to trade into this level and I see the market accepting above it instead of reversing like it did over here, I would be looking to go long, targeting the next draw on liquidity level. Okay, let's just keep playing price out for a bit. Let's see if we tap into the upper there we tap into the upper area. Price action like this indicates to me that we should be going for this level up here. Once again, reason being is we've tapped into a level where we expect liquidity to be collected. We see strong bullish price action indicating that we're not going to go lower, and the next daily not daily but hourly swing point that's visible in the charts to me is over here. Once again, you could argue that there's a high there as well, so I wouldn't say that's necessarily wrong. And that's the second way I would trade it. If we don't get rejection like we do over here, and we start shifting the market structure bearish, then I'm going to be looking for the market to go higher. It's a great way to stay with the trend. It's a great way to actually be able to capture bigger moves and to stay with a clear plan that you can be following with precision every single day in the markets. So that's, once again, I haven't looked at this chart in this specific day, so I don't know if it's going to reverse now or if it's going to reach for the upper levels, but the idea should be clear. Okay, it's not going to work all the time, as there's nothing that works all the time, but it's going to be more profitable than it is not. Okay, so let's just keep playing the price action. We tap into the level again. This is moving into 11, which to me signifies that the probabilities of my trades being profitable decreases. So at 11, I would stop trading this. Nonetheless, we're just going to keep playing forward. I'm actually going to be curious if we do reach into the upper level or if we do get rejection. This is now getting obviously rejected. We're shifting the market structure back bearish. You would be looking for the next draw on liquidity, which is here. Now, and you keep doing this back and forth. That's the way that I like to determine my draw on liquidities. I'm just asking myself, based on the higher time frame market structure that I'm seeing, where is the market likely going to be going next? And in this example, with the market structure looking like this and this market structure shift after the draw on liquidity above this high, I would be looking for the market to go down here, and there is room for you to take a trade going short at this breaker block as an example, where they stop you on the thrust with a target of this low. Okay, let's just go into the next London session, just because let's remove the drawings, just because the volume dies down a little after 11 and we want to see the market moving. So this is another scenario, right? This is a thing that you need to understand. You will always have to adapt to whatever the market is presenting to you. When we're up that high, I do still want to zoom in to the left because I want to see what we have, right? And I think it is likely that if we are up here, that there's a chance that we can trade above this high. And that's definitely going to be a draw on liquidity that we need to pay close attention to. Now, if we don't reject and we go above there, where do I think we're going to go next? Very simple. I would think about this breaker. That's the room that we have to play if we're going to be looking to go long. Now, if that doesn't hold, you're looking for this. If that doesn't hold, you're looking for this. If that doesn't hold, you're looking for this here. And this is how you would map out the charts on the highest time frame that you're using to determine the draw on liquidities with the information that's presented to you. Now, obviously, if we're going to go down, where do we think we're going to? We have this low here. We have this low here, which is the most significant one, as we do swing into it and out of it more aggressively. And if we do end up breaking lower, where do we think we're going to go? Same question as for the upper areas. I would think we're going to go here. And that's how I map out my charts. and look at the levels. And after I've done that, I look at the lower time frame and just wait for the market to show me something. So we're moving up. We do have a drawn liquidity above this high. We're getting some fairly decent rejection, although nothing significant. There we break above. We're now expecting the market to move up there. We do see quite a big acceptance there, and that's how I would map this market out. You look to the left-hand side on this chart. Let's go over here. Sorry, I just lost this. Okay. And we're now expecting the market to trade into this breaker block. Now, are you expecting the market to reject there and go the other way for hundreds of pips after we touch it? No, these are just reference points. You're not forcing anything into the market. The market could very well just drop lower from here, but you're playing the odds for the market to move higher. Okay, and that's exactly what you're doing. The next candle opens up, pulls back, starts moving lower, taps into the area that we spoke about was a likely area to see some rejection. And once again, this is how I would map out my drawn liquidities. Not every day is going to be exceptional in terms of you reading the market, but you can see that we had a fairly decent idea with the market moving into the upper level once we clear this high here. Okay, which is the big swing that we had on the left-hand side. I'll reference and show it to you guys here. We don't necessarily have to turn at every single drawn liquidity. Okay, this is what so many people get wrong and why so many people lose when it comes to big trending days, and not necessarily big trending days. If you're in a session where volume is present and the market is pushing up and it's not rejecting, then the market's just going to keep pushing up. Why would you try and go short when you can just get into the move, grab a piece of the cake and just leave? Right? There will be days, yes, absolutely, where we trade into such a big old high and we melt lower. But you have to adapt to what the market is telling you. Because at any point here, and this is where we're focusing on the hourly, from our higher time frame levels, which we know are these two, is there anything here to tell you that we're moving lower? One might argue, yes, we broke below this low, we pulled back, created a new low, but at any point, were we below the actual level that we're interested in? No, this is just the market ranging above a level of interest. Nothing more. You would need the market to trade back below the level first before you even consider going short. Otherwise, you're still long bias, expecting the market what? To drive up. And this is exactly what we see over here. So remember, guys, you're looking at one time frame that's going to be your highest time frame for drawn liquidities, and you can see how many you can have. You don't need to be limited with just one above and one below market. You're just saying to yourself, hey, during this 2 to 3 hour period that I'm going to be sitting in front of the charts, where do I think are the levels that the market could trade into, and how can I trade them? In this case, the market was down here just with the close of this bearish candle. We say that if we want to go short or see rejection to go long, we would need to wait for the market to break these levels. If we were to break these levels, there's a high probability that we're going to tap into this level here, which is a breaker block once again. If we don't and we move up, we're going to be looking for this big swing high here for rejection or acceptance. If we get acceptance, we would go long and we would expect the market to move up here. And if we see rejection, we're going to look for the market to go back down. It's very simple. You don't need to overcomplicate this and say, I need to limit myself to one specific drawn liquidity, and if it doesn't happen, I don't execute. No, you can just simply determine many levels and play off them. Just wait for the price action. Wait for the market to confirm that you're right or wrong. And even if you do that, you're still going to fail sometimes. It's perfectly fine. This is still just probability. Nothing is 100% guaranteed. So if you go into the market with that mindset, you're going to have an easier time. This right here that I'm showing you, you can turn this into a strategy that you can trade, and that can be your strategy. You can look and you can try many variants of this. You can say, I'm going to be looking for 4-hour levels, and I'm going to be looking at 5-minute price action for confirmations or rejections, and you do the exact same process. You look at the 4-hour candle and you say to yourself, hey, if we move up, where are we going to move up into? If we move lower, where is it likely going to go? And as the market moves either up or down, because it's going to move up or down, there's no other way the market can move, you then assess the 5-minute time frame as an example with a 4-hour drawn liquidity and see is the market showing me that it wants to go lower, or is it rejecting and now we're going to go back up? And that's